Welcome back to another episode of the Integrity365 Financial Insights Podcast. I'm Sophie Haslehurst, Chartered Financial Planner at Integrity365, and I'm joined by my colleague Marcus.
Good afternoon. I'm Marcus, Chartered Independent Financial Advisor.
Now, in today's episode, we want to address the impact, the cost of living crisis, and demystify some of the queries that we've had from clients at all levels and different life stages, whether that be at retirement, whether you're just starting out as a saver, or you're just concerned with protecting what you've already got. We'll be discussing some of the measures put in place by the government, the current market outlook, and some additional resources and financial planning that could be useful in providing some cost of living clarity and help ease some of those financial anxieties. Now, I know, Marcus, you've seen it as well, but there's been so many headlines that are sort of scaremongering in the last sort of 18 months. I've noticed it particularly around when there's been quieter news days. There's been a lot of noise in the news. And I know that definitely, especially after the Sunday papers sometimes make big sweeping statements, we can get a lot of client questions, mainly around, back in the end of 22 when we had the big increase in inflation, which then the Bank of England tried to counteract by increasing interest rates. Sort of, have there been any particular things that you've really noticed that clients have been asking?
Yeah, absolutely. I think people are generally struggling day to day with things. I think in the past many people have taken for granted. Obviously, in the main, I think where most people are feeling the pinch is, for example, in supermarkets, rising costs of food, certainly fuel. You know, I'm sure everybody's experienced over the last 18 months or so a substantial rise in the costs of energy to heat and provide electricity to their homes, and also at the fuel pumps. So yeah, day to day, I think across the board, everybody's seeing the effects of the costs of living increase, and some more than others.
Definitely, because it was also quite a steep increase, wasn't it, over quite a short period of time. And I think wherever there's a change, it's always going to be an area for anxiety for people, because where you see change, it always makes you think, are my plans, going to still work with this? But where we saw sort of interest rates rise from 0.25 to 5.25 as they are now, I think it did cause quite a lot of concern among clients. But like you say, that sort of impact of inflation increasing at such a rapid rate, when you're into double digit inflation, it does start to worry people, because they think, is my money still going to last? Am I going to be able to afford to continue to save? And will it affect sort of what my goals and dreams are?
Absolutely. And I think where that's extremely pertinent at the moment is people with borrowing and things like that. So seeing the rising costs of mortgages that are, where any fixed deals or fixed term deals have come to an end and people are having to remortgage, or looking at financing other ventures such as, new car purchases and so on, because obviously the rises in these interest rates, it's now making things more expensive than what people perhaps have been used to in the years prior to that, where interest rates have been, at historic lows for a prolonged period of time. So one of the many areas that I'm experiencing within my clients that I look after is the rising worries of how they're going to afford to continue to look, run their household with the rising costs of both the mortgage lending, as well as the associated costs, we mentioned earlier with regards to energy and so on. So yeah, there is a lot of worry out there, but there's also people that you can turn to, such as ourselves, to point you in the right direction. And I would very much advocate, if you're worried, that the last thing you should be doing is sticking your head in the sand and hoping things will get better. Talk to somebody, talk to us, and if we're not able to help you, then we'll probably know somebody we can point you in the right direction to talk to.
That's right. And I mean, I think a lot of people that I know who I spoke to, clients and other professional contacts, were really worried about interest rates rising. But if they're in a fixed term that's not up for renewal yet, sort of, is there any advice that you'd have for people like that? Because actually, they're not really impacted yet by that increase in the interest rates.
Absolutely. I think there's no harm in looking 6 months ahead as to what, if your deal's due to end in the next 6 months, then many mortgage advisors are able to kind of secure deals for people to have a look at what's around. And should interest rates improve during that period as well, then you might well also be able to move on to a better rate than what they've searched for you. And I think just that forward planning helps to enable a little peace of mind for people as well. So rather than waiting for the last minute and having a shock, and seeing what the potential increase in your payments might be, if you plan earlier, you might be able to implement some planning in that period to help actually, compensate for those increases and by mitigating costs in other areas. So certainly forward thinking and speaking to your financial advisor and mortgage advisors early and planning early is the best course of action.
Definitely. And one thing I've always sort of said to my clients as well is check the terms of your mortgage. Like you said, be prepared. You've got 6 months before your deal comes to an end to try and resolve it. But also sort of be aware. So if you can afford it, making some slight overpayments now, that can always be a good
Yeah.
way to do it as well. And also just sort of going, well, actually, this is the reality. Maybe you can't save as much, but what does that look like? And I think that sort of port that comes in professionally can be a really key part of taking away that concern, because like you said, if you are aware of things, then it just means you know where you stand.
Yeah, absolutely. And I think a little known area that people, well, certainly I've heard people talking about it within my client bank, both and within my friendship groups and family, which I'm sure you might be able to expand on here, Sophie, is the mortgage charter. Um, so, have it been able to, if you are really, really, really struggling, to be able to talk to your mortgage provider, your mortgage lender, and discuss this 6 months option that you have in which to effectively resort to an interest-only type payment if you're on a repayment mortgage. With that, I believe the balance then goes on to the rest of your mortgage debt at the end. So your payments will increase at the end of that 6 month period, but it provides a window where people are able to reduce their outgoings on their mortgage lending for a period of time, which should perhaps be able to provide a meaningful buffer during that period.
Definitely. And I think the big thing to be aware of is that people will try and help. The institutions, they will always try and help you if you're in difficulty. And I think it's something that a lot of people are really worried about, because you never want to lose your home or be concerned about that. And I think one of the sort of myths that we wanted to sort of really bust first of all is the fact that if there's ever sort of a concern about increasing interest rates, that means that's it, you're going to lose your house. I mean, the reality is there's loads of different measures that you can take, isn't there? So you can reduce your borrowing, you could move house, there's lots of different things that you can look at doing, as well as sort of trying to make the most of cost cutting in other areas. That means that actually it's not likely to be a reality for a lot of people.
Exactly. And another thing that you could do, dependent on age, you might be able to extend your mortgage term, which can help to substantially decrease the costs of lending each month, depending on the extent to which you're able to extend your mortgage term. And I think the days, are slightly different to a number of years ago now, where you are able to borrow on a mortgage for longer terms into later life. So, not being afraid to explore that. If you are finding things difficult, take that step and speak to somebody about it. Don't just hope things will improve. Speak to your lender. They will, as you say, want to help you. Ultimately, you know, they are lending you money, but they're also making money off you. So they don't want to lose you as a client or a customer. So they will be willing to help you. And unless you pick up that phone and speak to the mortgage lender or your advisor, you're not going to get that help. Unless you ask the question, you might not know what help is available to you. So just take that leap and, pick up the phone and speak to the people that might be able to provide you that financial assistance.
No, definitely. And there's also some measures that the government sort of introduced in the latest budget, which was earlier this month. Jeremy Hunt sort of made some announcements. And I think it's really worthwhile remembering that the government are trying to encourage working people to work and earn money. So the cuts that they've announced are in national insurance. So last year they made a cut in national insurance. They've made another cut in national insurance. Now, that only benefits people who are earning a salary. That doesn't benefit people who have income through, you know, investment properties or dividends and share portfolios and things like that. So the government are really encouraging people in the working population to continue working because, you know, unemployment isn't at a high. You know, we've got quite low unemployment in the UK, which indicates that although, you know, the economy not isn't growing as much as we would like it to, the reality is there's jobs out there for people, and the government are trying to encourage people to go out there and work. One of the other ways they've done that is by increasing the childcare scheme. So, you know, the fact that everyone who has an over 3-year-old can have some form of childcare without cost to them is really encouraging because, again, it's getting that working population out there. One of the huge measures that they did, which was a little bit unexpected, but is been very welcome to a lot of people that I know and work with and clients, has been the increase as well to the rate at which you start having your child benefit reduced. So now you can earn £60,000 a year and not have and get full child benefit. Now, if you've got children sort of born more recently, that's only going to be for 2 of them, but that can make a huge difference to sort of what you're having to spend money on because, Marcus, I'm sure you'll tell me that having children can be quite an expense.
Well, absolutely. Having two, well, now teenage children myself, but having to, navigate the costs of putting my children through nursery and so on. It certainly was a financial strain, and the costs of that per month were more than I was paying for my mortgage at that time when I
Gosh.
was in my marriage. So any financial help towards, helping to relieve the financial burden of having children. I mean, I don't believe there should be such burdens in place. If you choose to have children, you should be able to comfortably get by. But it is difficult. Costs of childcare are rising all the time, and to have this extra relief provided by the government is going to help many. My own situation, my partner loses her child benefit due to earnings and so on. So it hits more people than people realize, and I think that extra bit of relief will help many households, which is only going to help towards helping to cover the increased costs of lending if they have a mortgage, and the rising cost of fuel, etc., as we touched on earlier.
Yeah. And one thing that I seem to have questioned more than anything else is when can I actually afford to retire? And I think it's always been a question that we've answered, you know, having done this job for nearly 2 decades, it's quite amazing how many times sort of people go, can I actually afford to retire?
Mm.
And I think when there's sort of all these headlines that inflation's higher and things like that, it becomes far more permanent in people's minds that they need to know if they can afford to retire. How do you typically tackle those questions with your clients?
Firstly, you've got to really understand the whole situation that the client's currently living in. You've got to understand their whole financial situation and factor in exactly what assets and capital might be utilized towards meeting their financial income requirements in retirement. Um, if you miss areas out, your planning can fall short because you're not fully aware of the whole picture. If you're very honest and you've got a good relationship with your financial advisor and they're aware of your whole situation, then your planning is that much easier because we are fully aware of the picture and we can factor that into our advice process.
Mm,
So one of the things that I do with my clients is, well, firstly, we've got to establish exactly what their target income might be.
mm,
And typically we'll obviously allow for inflation in that, and on an ongoing basis also to make sure that the financial plan has longevity and can provide that level of income for the rest of their lives.
mm,
So one of the tools that we use to great effect to help, you know, visualize that for the client is cash flow forecasting.
mm,
So that allows us to kind of show in graphical terms or tabular form. It depends what the client's want how they wish to see it, but it can help illustrate whether somebody is in fact able to afford to retire or not.
Mm.
And if they are, that income that they're targeting will be able to be sustained for the rest of their life. But even in the situations where that might not, perhaps that's a utopia position, obviously, but it also allows us to offer advice in the areas where perhaps the planning might fall short in certain areas. So we can factor in how much more they might need to pay in to be able to get to that position that they want to be in when they come to retire. We can also stress test scenarios, so we can build in things like a market crash and how that might have an effect on the underlying capital that's being utilized to provide these income sources. So that's a very, very powerful tool at the moment. I think in times of uncertainty and rising costs at the moment, if we can help to show a client in a visual format that actually, yes, you're able to retire, or this is what you need to be able to do to get to where you want to be, it's a very, very powerful tool, and it provides a substantial peace of mind to my clients, certainly.
And one thing I would always say, my biggest tip when it comes to affording your retirement is also to check your state pension entitlement. So you need
Yeah,
35 years full national insurance contributions now to get your state pension.
yeah,
So check your state pension age and check your entitlement to state pension, which is all done on the government gateway or at something called a BR19 form. It's a really great foundation to your retirement income. And Marcus, I'm sure you're aware of this, as am I. I don't think the Conservative government have stopped talking about it, but it's triple locked. So it's going to go up with inflation, with earnings, or at least 2.5% a year, which is a fantastic benefit. And it really does help to provide that foundation. No matter what retirement income you want, it's a great foundation for you to have. And ultimately, most people have made their contributions to pay for national insurance, but you also get credit for things like claiming child benefit if you're not working, for having children, for caring, and if you're unemployed for a long time as well and claiming job seekers, you get credits for your national insurance. So it's always worth double checking. I've had a few clients whose records haven't been correct, but also a couple of clients who've also paid for some extra years. Now that ability is coming to an end. They keep changing the dates for that. At the moment, I believe it's July next year, but it's always changing. So do keep an eye on that sort of thing, because it's really important and it's something you've got innately as long as you've got that contribution in your record.
absolutely. Yeah, I completely concur with that. I have a number of clients who have bought, extra, um, you know, years, if you like, into their state pension at what they perceive to be a very reasonable cost for what it will provide longer term. So absolutely, I would completely advocate that. And just coming back to what you said about the triple lock and the increases in pensions, some of my clients who have been experiencing these pinches on their finances with the rising cost of living, the increases in their state pension, and perhaps they're lucky enough to have other pensions that increase in payment as well, has made a substantial difference to their ability to be able to afford the running of their home and to maintain their standard of living.
Mm.
So it's been absolutely massive. I think one other area that perhaps people also forego thinking about is exploring what benefits perhaps are available via their employer.
Very true.
But there's many things that people perhaps just pay for without thinking that maybe can be covered by costs of benefits that are provided through their employer. One such thing, employers might have a cash plan, for example, which can help towards providing costs towards optical care or dental care. So, I mean, what's your experience with that, Sophie? I'm assuming you probably have the same sort of experiences there.
Definitely, if you've got private medical as well, you can get private GP appointments. That can be a huge thing with relieving stress, especially if you've got a young family. Quite often they will be covered as part of your private medical, or you can cover them. And if you have a private GP appointment, it's normally done online, and it can be far more flexible than trying to get in to see your GP. So that can alleviate some of the worry about you having to take time off sick and things like that. I'd also say as well, making sure that you've got the right protection in place is really important to help alleviate some of those worries. And a lot of companies offer both income protection, but also sort of death in service, so some form of life cover. So you don't necessarily have to pay for life cover personally. It might be a way in which you can sort of cost cut by keeping an eye on what your employer is actually offering from that side of things.
Yeah, and I think another thing would be as well, you mentioned online doctor's appointments there. If you're fortunate enough to have some sort of private medical or something like that, we're all very much aware of this, the pressure the NHS is under at the moment, and the ability to make an appointment. Now, just explore these options that you may have with your employer. You may not have it, but if you have and you're not using it, and you're worried about something to do with your health, and you're worried about how long it will take to get an appointment with the NHS, just have a look at what benefits you have. You might be able to make an appointment with a consultant or a doctor online, as Sophie said earlier, and be seen that much quicker. And it might be something you're already paying for, but not actually utilizing. So look at the benefit package that your employer provides you, and make sure you're making full use of it, rather than paying for it and unbeknowing that you actually are potentially covered for what you're paying for.
Definitely. And I think that the final point on that as well would be there's quite often a lot of support. So if you're feeling a bit overwhelmed by everything, I feel that there's been, a huge amount of change in the last 4 years. I've seen so many people sort of talking about this time 4 years ago when lockdown was announced. There's
Mm.
been a huge amount of pressure on a lot of people. And I think most employers have some form of well-being offering. For instance, we all have Leaf Yard, which is the sort of mental health support side of things. And it's really worth exploring that or speaking to your HR team if you haven't, to see whether or not it's something they might be able to put in place. And I think just knowing you've got that independent support and sort of processes that you can go through to sort of make sure you are in the right place, because sometimes we can be worrying about nothing, but sometimes there are things to worry about, but it's about managing them in the best way to really bring that overall support together.
Yeah, absolutely. And I just advocate, dependent on who you are listening to our podcast here, that, if you're worried about what you don't have in place, or you want a review of what you have in place for yourself or for your employees, it's something that, just pick up the phone to my colleagues and I, and it's something we can certainly help with. It's a very much a benefit that I think staff these days appreciate. And it is something we can certainly help people with.
Definitely. And I think that's all from us today. So thank you so much for joining and listening to us. Marcus, a big shout out to you for joining me today. I really appreciate it. And we've raised some quite hard-hitting topics there and a range of things in quite a short space of time. So as Marcus said, please do let us know if there's anything you want to ask us. As always, our team of independent financial advisors at Integrity365, we're here to support you in your financial plans. So please do get in touch if there's anything we can do to help. Don't forget to subscribe to us on YouTube and Spotify, where you can find more insightful episodes on a range of financial planning topics. So thank you again for joining us, and goodbye.